most of the time after a war, the stock market actually does pretty good. So here's this decent example. 4 weeks after everything's up, so Libya, Gulf War, Afghanistan, next day, you see that we're down. 1 week later we're up 5. 2 weeks later we're 7%, we're 9%. Iraq 2003, barely down, right? I mean, we end up closing the next day at about 0.2, and then the rest of the day, just approximately 4 weeks later, we went up about, we're up a month later, we're up about 6%. And so Soleimani, this is when Trump, this is the 2020 when Soleimani was hit. You see that the next day the market was down by 70 basis points, against 7% in the red, but then the week after we're back up, and then a month later we're about 0. But overall, something that you notice is don't sell out anything just because the stock market is there's some kind of crazy war going on. Large cap, Korean War. So this is kind of even a cooler map because you can see here the large cap, small caps, and how they performed. World War One, just like how each one returned during these large events. So it's definitely not a good idea to kind of sell out of the stock market just because there is some kind of war going on. 2020 US, Iran, COVID, Bitcoin, gold, and S&P 500. Ukrainian invasion, the S&P 500 down, Bitcoin down, and obviously gold, the safe haven, is definitely going to be up. 2024, 2025, global tension. I mean, Bitcoin has been honestly having a great year this year. A lot of events happened that's kind of helping the stock market perform very well here. So this is how do stocks do after major events. So here's another chart here showing North Korea invades South Korea, Suez crisis. As you can see, I mean, this one was intense, right? Because I mean, here is like the supply chain of the world, right? When it comes to goods being transferred from being sold from between the US, China, and across the world. So I mean, this definitely took a big hit. I mean, a year later we're down 11%. Cuban Missile Crisis, I mean, a month later, 3 months, 6 months, 1 year later, we're up 27%. Gulf of Tonkin incident, I mean, you got 1.6% down in the month, and then we're up about 2%. As you can see, anything else here? The Munich Olympics, it's always kind of like the immediate reaction on average is down, right? I mean, percent high here is about 60%, but like the average and the median initial reaction is kind of negative or barely anything, and then kind of things kind of improve within a year. The market forgets that there was any war, and they just don't even care like what happened. The market really has short-term memory. I mean, a lot of investors have short-term memory loss here, and so it's not. It is always that's what they say. Like during a conflict, the best thing to do is buy the dip. The market goes down, you buy some. So because nothing ever stays. I mean, here's another image here. So Middle East conflict in the US stock market. So the S&P 500 has tended to languish in immediate week following a major past episodes of Middle East conflict, but has recovered in subsequent months. So Iraq invasion in 2003, a week preceding, we're up about 9%. 3 weeks following the conflict, we're down by 0.7, and 2 months following the conflict, we're up about 5%. Libya civil war, ISIS in Iraq, I mean, the week before the Iraq war, we're up 1.3. 3 weeks later, we're up 2%, and a month later, we're still up about 0.8%. So Iraq attack and Saudi oil, up 1%, and then we kind of, 3 weeks after the attack, we were down about 2%, and then at the end of 2 months, we ended up just being up 3.3%. So on average, before any war, we're up about 2.3%, and then on average 3 weeks later we're barely down, and then 2 months later we're up. So if anything, if the market is down tomorrow, it's definitely going to be a buy. So don't let anything that happens kind of scare you out of the stock market. This is a good example right here, this oil embargo. If Strait of Hormuz is closed down for a month, maybe a couple days to a week. I mean, right now they've requested for it to be closed down, but I don't think it's going to happen, because their allies are going to need it, whether it's Russia, whether it's China. Definitely China needs Iranian oil to China is like a drug. Without it, China's going to crumble and fall apart. So I don't think things are gonna last too long. At least that closure of Strait of Hormuz is not gonna last too long. And then I think if the market is open, definitely this is a buy opportunity. The market always recovers after some kind of major attack. A week to a month later, we're back to zero, and the market has short-term memory loss. So all right, and I think that is it. Thank you so much for joining me. I'll be back again tomorrow, and see you next time.